Imagine making an investment and then reaching a point where the returns are effectively infinite. And while this may sound too good to be true, it actually can be achieved, and I've decided to give it a go in Vechain. So be sure to subscribe to gain immediate access to more content like this. The term infinite return was something I first came across in real estate, and it refers to a point when an investor has got their initial investment back and is still holding the asset from which any gains will be of an infinite return from there on. So a while back a friend of mine bought a piece of real estate here in the UK as an investment, and within 5 years of ownership he had earned his initial investment back and still owned the property. Now by this point he was playing with the house's money, so to speak, and any losses from this point on would mean that he still wouldn't come out worse than he went in, and any gains would be of an infinite rate of return because he no longer had any of his starting capital employed in this investment. Now the reason that in my opinion makes this type of investment strategy such a good one for the crypto market is because it provides a safety net of sorts in a market which is very infant and volatile and therefore risky. I think that Vechain is a great project with great investment prospects as far as VET is concerned, but like many other crypto projects there's also a fair degree of risk involved as well. Anybody that watched my videos from about a year ago will know that I made a significant amount of money in crypto, particularly in ADA and VET. And so now I've pivoted my investment strategy, and with the projects that I'm getting involved in now, I'm looking for infinite rate of return opportunities, where I can get my initial investment back as quick as possible, so that if I am right and the long-term prospects are good and the price of say VET or ADA rise in the long term, I'll do fairly well, and in case things turn out sour I'll still be covered, as it will be the house's money I'm playing with and not my own. Or in other words, I'm looking for the upside benefit while trying to remove the potential downside risk as soon as possible. As for Vechain, I've decided to employ a double-barreled approach. The first is that I wait for the points where I strongly feel that the market is undervalued and I think that a quick rebound is highly likely to occur. And these opportunities are fairly rare, but the one good thing about a volatile market is that there still are good opportunities like this from time to time. So anyway, let's say that I see one of these opportunities where I feel like the market is undervalued and a quick rebound is likely. I'll buy $10,000 and then wait for a quick rebound of say 10 or 15%, and then I'll sell out and get my initial investment back, keeping the $1,000 or $1,500 invested. And the great thing about buying at a price which I feel is below fair value is that if the market doesn't rebound right away, I can afford to wait, as I'm confident that I'm in at a good price and eventually a positive correction will occur. So far this strategy has worked fairly well, and I've been able to accumulate a fair number of VET, and all from profit as well. And I'll probably continue with this strategy so long as the market continues to offer opportunities to capitalize on. The second part of my infinite return strategy in Vechain is to cash out the VThor dividends and then get my money back from the sale of the VThor. Right now I'll be waiting a long time for that to happen because the VThor dividend isn't very high on a percentage basis. But actually that's okay for me because I'm holding out for the long-term growth driven by a large increase in adoption of Vechain services, which I personally believe is likely to occur. And if the value of VET increases, then so too should the value of the VThor dividend, as there is more demand for Vechain services from companies wanting to better their information capture on the supply chains, which is of course what Vechain specialize in. And again, if I'm correct in my analysis that the VET price is likely to rise with the dividend, then I'll also benefit from the appreciation in my holding, while at the same time being able to cash out my VThor and get my initial investment back. And one of the reasons that a lack of dividend, or even no dividend at all, doesn't really bother me in the short term, is because if modern finance has taught us anything, it's that disruptive organizations are often unprofitable or experience little profit until they are much larger, as they forfeit short-term dividends for long-term growth, which if played correctly will work out better on balance. Think about Uber and Amazon and Tesla. These companies weren't profitable until fairly recently, but just look at how well an investment made into any of these companies 10 years ago would have done by now. And to recap the strategy of infinite return, obviously it isn't completely risk-proof, but in my view, if I'm correct in my opinion that Vechain and VET will do well in the long term, and bearing in mind that there is still a fair amount of risk implicit in a VET investment, simply on account of how new the area is, then to me being able to build a portfolio getting my initially invested sums back as fast as possible is on balance better than just buying and holding for the long term. Because even though I think that VET probably will do well over time, I'd rather have a portfolio of half the size it would have been if I just bought and didn't take my initial investment back, but at the same time had much less risk involved. But that's just my preferred option, and every investor will have their own preference, which I'd love to hear about in the comment section below. Anyway, that's all for this video. If you enjoyed and would like to see more content like this, then be sure to subscribe. Thanks for watching.